Hi, I'm Bobo. In today's recap, there was a ton of buzz about public housing last week. Last Friday, the Housing Authority approved regular sales of Tenants Purchase Scheme flats, which refers to recovered flats at public housing estates. Of the 184,000 TPS flats, about 32,000 flats have yet to be put up for sale. Prices for these flats range from 140,000 Hong Kong dollars to 1.23 million Hong Kong dollars, with applications to start in the middle of this year. The scheme will target green form applicants and those under the Express Flat Allocation Scheme. Meanwhile, to speed up the supply of public housing, the government has relaunched the Private Sector Participation Scheme. 2 sites in Tengcheng and Chaiwan will be allocated for developers to tender for the construction of home ownership scheme flats. The sites are expected to provide 2,300 units and will sell at a discount of 65% to the market price, with a discount rate lower than the 62% discount for this year's home ownership scheme flats. However, this time, the terms for this scheme will be harsher. To start with, the government won't buy out unsold flats, and this time developers will be required to put up all flats for sale in one go. In other news, the US Federal Reserve has held off on raising interest rates. However, data suggests that there will be 2 interest rate hikes in the second half of the year. The 1-month Hong Kong interbank offered rate related to mortgage interest rate rose to 5.03%, a record high for this year. Some estimate that if the interbank rate continues to rise, banks may indeed raise their prime rates. As such, despite a rebound in transactions for some second-hand housing estates, home sales remain low overall. Looking at weekend transactions, Hong Kong's top 4 real estate agencies recorded 2 to 5 transactions for the city's top 10 blue-chip housing estates. Although some estates registered a rise in transactions, none hit double-digit sales. Even halfway through June, sales for some estates are only now just picking up. Telford Gardens in Kowloon Bay recorded its first transaction at the start of the month. This was a furnished and move-in ready 2-bedroom apartment measuring 538 square feet in size. A buyer living nearby bought the flat for 6.7 million Hong Kong dollars at 12,454 Hong Kong dollars per square foot, in line with the market. Based on the flat's original price in 2008, the former owner booked a profit of 3.81 million Hong Kong dollars, over 1.3 times in flat appreciation. Next, Lohas Park's Phase 6 development, LP6, recorded a low-price transaction for a 1-bedroom flat. The low-floor flat was Unit M of Block 5. With a saleable area of 305 square feet, the flat sold for 5.05 million Hong Kong dollars at 16,557 Hong Kong dollars per square foot. This is actually the same price of the estate's lowest priced flat, Unit K, also on the lower floors of Block 5, which was sold last month. Going back to Unit M, the original owner bought the flat for 4.77 million Hong Kong dollars and held the property for 5 years. Deducting additional expenses, the original owner is expected to make a small profit of 130,000 Hong Kong dollars. Though the luxury property market has been getting increasingly active, it still recorded some significant losses. In one recent case, a mainland Chinese homeowner lost nearly 30 million Hong Kong dollars in profits selling their Park Inverness flat in Kowloon Tong. Measuring 1,732 square feet in size, the unit was put up for sale at 52 million Hong Kong dollars last year and eventually sold for 34.95 million Hong Kong dollars. With 3 bedrooms, 2 ensuites, and 2 storage rooms, this unit has a price per square foot of 20,179 Hong Kong dollars. The original owner bought the flat for 49.53 million Hong Kong dollars in 2017. Including 30% in stamp duty, the owner is expected to lose nearly 30 million Hong Kong dollars in profits, or 60% in depreciation. Turning to the first-hand market, about 200 transactions were recorded over the weekend, similar to that of the previous weekend. Over 90% of the transactions came from Novoland's Phase 2A development in Tuen Mun. Developed by Sun Hung Kai Properties, the project held its second round of sales on Saturday and sold 190 of its 223 units, or 85% of its units. Other sales came mainly from new developments such as in One Above in Ho Man Tin, Baker Circle Euston in Hung Hom, and Grand Victoria 3 in West Kowloon. As for monthly transactions, the first-hand market has definitely seen a decline in sales, with only 523 transactions recorded so far this month. That's only 45% of last month's total. Even still, some new luxury properties have definitely recorded high-value transactions, including that of a house worth over 100 million Hong Kong dollars. On Saturday, a house at number 3 Fei Ngo Shan Road, developed by China Overseas, sold for 153 million Hong Kong dollars at 43,404 Hong Kong dollars per square foot. This detached house is 3,525 square feet in size, with a garden measuring 1,127 square feet. The home also offers 4 bedrooms, all ensuite, as well as a private pool and a built-in elevator. This is the second sale for the project, which offers a total of just 5 houses. Meanwhile, the Vertex in Cheung Wan, developed by VMS Group, hit a record high with its price per square foot for a 3-bedroom apartment. The flat is Unit A on the lower floors of the East Wing. The 3-bedroom flat, which measures 639 square feet, sold for 16.36 million Hong Kong dollars at 25,606 Hong Kong dollars per square foot. This is the highest price per square foot for any 3-bedroom unit since the Vertex sales were restarted in February. So far, 267 units have been sold, which is 64% of the total number of units. Looking ahead to this week's new property market, Hip Shing Hong's Araya is expected to announce prices for at least 50 units. Also, keep an eye out for Henley Park at Kai Tak, developed by Henderson Land, which opened its show flats for media viewing this Monday. The developer will likely launch flats for sale this week, starting with its first batch of low block units. That's all for this episode. See you in the next.